that power give us a lot by changing a little. And that is very important for Bitcoin because the power law that we discover in Bitcoin is between price and time. First of all, how beautiful, right? What is money? Well, for sure, money is related to time. And in Bitcoin is one-to-one relationship, but is not linear, is a power. So it's actually a little change in time gives you this enormous change in price. I'm a little sad when people don't like the power law because they will like an unbridled exponential growth. But it's not good for Bitcoin.
The Bitcoin power law suggests that Bitcoin's price follows a specific mathematical pattern, where price changes are proportional to the number of users or adoption rate. This model predicts that as more people adopt Bitcoin, its value will increase exponentially, following a power law trend. Investors use this framework to forecast long-term price trends, although it's subject to debate and criticism due to the unpredictable nature of cryptocurrency markets. Building on this concept, podcaster Robert Breedlove interviewed Bitcoin expert Giovanni Santostasi, who elaborated on Bitcoin's power law, the superlinear link between price and time, and its potential as a strategic reserve. He also provided insights into Bitcoin's growth, adoption, and the dedication of its followers, comparing it to an organism. Giovanni Santostasi described Bitcoin's power law as interesting, in which small changes have big consequences. He emphasized that the price-time relationship is superlinear, with a power of around 6, producing a multiplicative effect. Santostasi emphasized Bitcoin's amazing growth, from the initial transaction of 5,000 Bitcoins for $1 to a 100 million-fold gain in 15 years. He noticed that this expansion benefits adoption, as addresses increase with the cube of time. Santostasi sees this phenomenon as an important component of Bitcoin's behavior, impacting its long-term potential and overall impact on the financial system. Watch clips from the interview for further insights into Giovanni Santostasi's conversation with Robert Breedlove. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
It's good that Bitcoin is a power law because it's powerful too, right?
Yes,
Bitcoin is, so I love it also because of that, the power law of Bitcoin. But so if there is a relationship of this kind where the one quantity is related to the other by a power, then it's called a power law. And that power doesn't have to, the parabola everybody is familiar, because we studied in school, we know how to plot it and all the properties. But that number can be anything. It can be above 1, and when you talk with Jeffrey West, probably explained you, right? They are called superlinear relationship, or that number can be below 1, and then they are sublinear relationship. They are behaving a different way, and they describe different things. In the case of Bitcoin, is a superlinear relationship because it turns out that power is actually close to 6 for Bitcoin. So in general, that number can also be negative, because if it is negative, then it means that it is inversely proportional. That power gives us a lot by changing a little. And that is very important for Bitcoin because the power law that we discover in Bitcoin is between price and time. First of all, how beautiful, right? What is money? Well, for sure, money is related to time. And in Bitcoin is one-to-one relationship, but is not linear, is a power. So it's actually a little change in time gives you this enormous change in price, right? In fact, the power is 6. What does it mean? It's very close to 6, it turns out, empirically, when you measure it, right? So price equal time to the 6, or proportional to time to the 6. So if you wait, let's say you hold it for 10 years, right? And then you hold it for another 10 years, so you double the time. That means that by holding 2 times longer, you get 64, you see? Because 2 to the 6, it's enormous. It's 64. So 3 times, like let's say now you wait 30 years, right? Instead of 10 years, it goes to 720.
Wow.
So because 3 to the 6 is 720.
Right.
So it's a multiplicative effect. Coin, you were talking about in the beginning, is the fastest growing asset. I want to remind people that literally Bitcoin went up from the first USD transaction. There was 5,000 Bitcoin for $1. Can you imagine? So actually, that will be the best use of my physics degree to make a time machine, so we can go back and buy some Bitcoin at that time. That would be really cool. But so if you consider that transaction to where we are right now, we are talking about 100 million times. So I bet we can research it. I mean, you love history. I love history. I don't think there is anywhere in the world where something went up 100 million times in 15 years. It's crazy. It's unbelievable crazy. We have all this information with Bitcoin. So it's a good proxy of adoption, right? So the addresses grow with the cube of time. And it's really beautiful because it looks like one of these viruses that is curbed. Now, people could say, well, I don't like that curbing, right? Because why should it be curbed? It's actually good. It's like the nuclear reactor where you want to slow down the adoption because you want to give time for Bitcoin to grow. The infrastructure needs to grow. The miners need to buy the equipment and do it in time. You don't want an explosive growth and then the system collapse on itself because it cannot support itself. Right. So this is actually the best possible growth as fast as possible. Come on. 100 million per in 15 years. How much do you want more than that, right? And now that it's bigger, it looks low to us, and many people are impatient because, we would like to have the growth that was in the beginning, where you could multiply by many times your wealth, right, within a few months. People will want that.
Giovanni Santostasi enthusiastically embraced Bitcoin-based retirement plans, stressing their potential as strategic reserves. However, he pointed out the significance of balance, implying that governments owning 20% of Bitcoin may be excessive. Santostasi sees Bitcoin as a warrior that is winning without fighting, which has attracted backers such as BlackRock. He believes that once people grasp Bitcoin, they will become committed, comparing it to an organism in which cells join a network and cannot leave. Giovanni Santostasi noted that Bitcoin's value is rooted in its network, making it impossible to abandon. He also talked about statistical techniques like R-squared, which indicates a 0.95 connection between Bitcoin's price and time, implying a strong straight-line link. Santostasi noted that this straight line illustrates Bitcoin's nature, with oscillations cancelling out, and emphasized the importance of knowing logarithmic scaling when analyzing Bitcoin's growth. Let's go back to the interview and watch more clips to gain insights from Giovanni Santostasi.
It's a good thing that there are retirement plans based on Bitcoin. Yeah. It's a good thing that there are nations. I don't want nations to own 50% of Bitcoin, by the way, or even 20. Hopefully, it's a small portion, right? Yeah. But it's nice, right? That we are starting to think, let's get a strategic reserve, right? It needs to be a balance. I really don't like the 20% or said, I don't know what is your feeling about that. I think a good compromise is okay. It's good that we are interested in doing that, but I would rather people own Bitcoin. Bitcoin is a warrior that is winning without fighting. Yes. It's like a Zen warrior.
Exactly.
It's like, okay, you come to me, Like, Saylor did the same thing. He was talking bad about Bitcoin when he converted. Same thing with BlackRock. They were criticizing Bitcoin. Now we are supporting.
And like a black hole, it is unidirectional, right? Once you cross that event horizon, philosophically or cognitively with Bitcoin, there are no ex-Bitcoiners, as has been said. It's like once you go into the rabbit hole, you don't come out.
Right, exactly. And you know why? I have an idea about that, because if you're thinking about like an organism, think about when a cell decided to put aside, right, the fact of being alone and doing his own thing by itself and say, okay, I'm going to join this network. Once he did that, you cannot really leave a network because the value is in the network itself. It's different from Facebook. You can jump ship with Facebook. Right? You can say, hey, there is a better place. I'm going to X, or I'm going to Nostr. I'm going somewhere else. With Bitcoin, you cannot do that. Of course, there are some people that leave, etc. But it's a minority, like you say. I think it's really a minority because you're going to lose the value, the time, the energy, the money that you put in. So you need to stay in the system, right? Because the value is in the system itself, right? It's the only place where that really happens beside organisms, or a city or whatever. It's a big investment to be, sure, you can go to another city, but, you get adapted to the city, you live in the city, you get your children in the school.
Right.
So you became an integral part of that system. And then it's very difficult to leave that system. With Bitcoin, even more so. That straight line. By the way, about that straight line, if I can say a couple of things, there are some statistical tools that you can do, like the R-square. So the R-square is because it's not just like a straight line that looks like straight.
And that is the metric of virality, right?
Yes.
R-squared.
Well, it's the metric of how good that fit is, right?
Okay.
From a statistical point of view. So the R-square tell us for Bitcoin is about 0.95.
Oh, wow.
That means 95% of the behavior of Bitcoin is explained by that straight line.
Wow. Okay.
And everything else is basically that oscillations that we are seeing that are associated with the bubble. Now, notice that the oscillations are going up and down relatively to the straight line. So they almost cancel. Yeah. So it's almost like they were not there. In fact, this graph is another way of looking at that basically, even if there are these oscillations, really the straight line is the closest representation of what Bitcoin does. Now, many people get confused about the straight line because we're thinking, really, is it straight? Well, it's straight in this weird scaling space, right? Where we are looking at how the scale of the price changes relatively to the scale of time. Now, if you go back to the linear graph, it is our minds are very linear. We have very difficult time to think about logs, etc. You get this graph. Now, what this graph is. So, first of all, the red curve is the power law.
Right.
So now,
and this looks like one half of a parabola, as you were describing at the beginning.
It's actually a super parabola, right? Okay. Because it's the positive side because we don't have negative money, right? Or negative time.
And this is days since Genesis block.
Then it's everything. First of all, when we talk about time, we always talk about the time from the beginning of Bitcoin. That makes sense. It's the only time that makes sense. It's almost like Bitcoin.
Day zero.
It's almost like the Big Bang, right? Yes. It's the day when everything started, right? Yeah. So you measure the time from that Genesis block, right? January 3, 2009.
It should be noted that September is traditionally a difficult month for Bitcoin, with the cryptocurrency frequently seeing negative returns. However, this year's results may differ due to the introduction of Bitcoin spot ETFs and increased institutional demand. This new development can inject a new capital into the market and drive higher prices. On-chain analytics also indicate that Bitcoin may experience growth, with 3 important signs supporting this view. Firstly, crypto traders achieved large profits in August, with $4.251 billion in earnings. This is considerable and could lead to profit-taking, pushing prices down. However, the whale transaction metric suggests that large-scale investors are holding onto their Bitcoin rather than selling. This could indicate that they are waiting for further gains. Another crucial statistic is Bitcoin's supply on exchanges, which has fallen to its lowest level since December 2018. Because there is less supply to match demand, the decrease in accessible BTC may result in higher pricing. Combined with continuous institutional demand, this might lead to a perfect storm of price increases. The market value to realized value, MVRV statistic, similarly indicates that Bitcoin is now undervalued, both in the short, 7-day, and medium-term, 30-day, timeframes. This could imply that the cryptocurrency can expand, making it an appealing investment possibility. Institutional funds flowing into Bitcoin ETFs could boost demand and keep values above $60,000. If this pattern continues, the cryptocurrency market may see a long-term surge. However, monitoring these data and market trends is critical to predict what will happen next and alter investment plans accordingly. In conclusion, what are your thoughts on Bitcoin's power law and its implications for the growth of the cryptocurrency? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.